This is bullish for gold and silver. The fact that the stocks have now made new highs ahead of gold and silver is a leading indicator. And the next time gold gets to 5,500, it's going there and beyond. But when it gets to 5,500 again, the gold stocks are going to be a lot higher than they were when it hit 5,500 the first time. And silver even more so. By the time silver takes out that $121 high, which it will, the silver stocks will substantially higher the next time silver's at 120 than it was the last time. And yes, I mean, that is going to be a big number in July. But we have some serious economic problems that the president claims not only don't exist, but that the golden age of America has returned. And he mentioned that several times during the State of the Union. It's here.
Equity performance in the precious metals sector has begun to outpace underlying bullion prices, with mining stocks reaching new highs ahead of gold and silver. Historically, such divergence has often acted as a leading indicator for broader upside moves in the metals complex, suggesting that capital markets are positioning in advance of the next breakout phase. As gold approaches the $5,500 level again, projections indicate that associated mining equities could register significantly higher valuations than during previous price peaks, reinforcing momentum across the sector. Peter Schiff, a longtime advocate for hard assets and monetary discipline, points to this equity leadership as confirmation of strengthening fundamentals beneath the surface. He notes that silver's potential move beyond its prior highs near $120 may be accompanied by even stronger performance in silver-focused equities. With persistent macroeconomic pressures continuing to weigh on fiat purchasing power, both gold and silver remain positioned for further advances in the current cycle. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
You know, I want to end the podcast just talking a little bit about what wasn't said. That was the key. I mean, there was really no talk about the out-of-control deficit spending that has gotten worse since they passed the big, beautiful bill. No talk about the weakness in the dollar that's going to continue. No talk about the underlying weakness in the labor market, in the economy, in the fact that interest on the debt has spiraled out of control and that we're now paying more for interest on the debt than we are for Medicare or Medicaid, right? The only program that's still bigger than interest on the debt for now is Social Security. But we are heading towards a fiscal cliff, heading for a currency crisis, a sovereign debt crisis. And all he talks about is how great everything is, how the State of the Union is great as we're, nearing our 250th anniversary. And yes, I mean, that is going to be a big number in July. But we have some serious economic problems that the president claims not only don't exist, but that the golden age of America has returned. And he mentioned that several times during the State of the Union. It's here. This is the golden age of America. America is the greatest it's ever been. We're the richest we've ever been. We're doing the best, and our greatest days are ahead of us, and hopefully they are. They're just not right ahead of us. Maybe they're ahead of us in the distant future somewhere, but they are not ahead of us during his term. Not even close. We're headed for some dark days. We're headed for a real economic crisis, worse than 2008, on an order of magnitude. And one of the worst parts about this horrible crisis is who it's going to be blamed on. It's going to be blamed 100% on Trump and all the Republicans. Every Republican who's stood in line and cheerlead, you're all going down. You're all going to get blamed. And you know what else gets blamed? Capitalism. Because the Republicans are associated with capitalism, even though there's a bunch of socialists in the Republican Party. Republican, is the brand for socialism, capitalism. And so when the Republicans tank the economy, or it tanks on the Republicans' watch, it's capitalism that takes it on the chin. And then the Democrats get to say, not only did we tell you so, right? Blame it on the Republicans, but now they get to blame it on capitalism, which they don't like anyway. And it enables them to offer up their socialist solutions that will just make the problems caused by socialism disguised as capitalism even worse. But that's where we're headed. And I think the Democrats as screwed up as that party is, are headed to big victories in the midterms later this year and an even bigger victory in the presidential election. So what do you got to do? You got to load up on gold and silver. You know, silver earlier today got above 90 again. We've pulled back. We're at 89.50. Gold is got above 5,200, pulled back late today, but it's still trading now at 51.91. You got to buy gold and silver. Go to Schiff Gold. Silver, I guess, look, at $90, could it fall back down to 80? Yeah, I guess so. But who the hell knows? But gold at 5,200, you don't got much downside. Again, 5,000 is the floor. Maybe it goes 4,900, a little bit below, but it may just be going up. Look at the gold stocks. I made this prediction on my podcast a week or two ago. I said that gold mining stocks, the GDX and GDXJ, will hit new highs before gold and silver hit new highs. And a lot of the gold and silver stocks, particularly the gold stocks, not the silver stocks, the gold stocks, a lot of the big names hit new 52-week highs today. And gold is still $350 below its high. Silver is 30 cents below its high, and many gold stocks have hit new highs. The GDX and GDXJ have not quite hit new highs yet. They probably will by the end of this week. I think by the end of the week, those two indexes will have hit new highs, fulfilling another one of my predictions. But this is bullish for gold and silver. The fact that the stocks have now made new highs ahead of gold and silver is a leading indicator. And the next time gold gets to 5,500, it's going there and beyond. But when it gets to 5,500 again, the gold stocks are going to be a lot higher than they were when it hit 5,500 the first time. And silver even more so. By the time silver takes out that $121 high, which it will, the silver stocks will substantially higher the next time it was at 120 than it was the last time. So you still got an opportunity to load up on these mining stocks by going to my Europac.com, getting a separately managed account, buying my gold fund, the Euro Pacific Gold Fund, EPGIX, which is finally now, over the last couple of days, starting to outperform now the GDX and GDXJ. Some of the smaller stocks that we own are now starting to outperform. So load up. We've been waiting for this. Our whole portfolio was predicated on these junior miners kicking in. They didn't kick in last year, but I think they're going to kick in this year. So you have a great opportunity to buy the gold fund. EPGIX is the no-load symbol. And also, if you're just looking for some research, if you want to buy some gold and silver stocks on your own, you got to check out our premium research at my newsletter. We have a free newsletter that you can sign up for at Schiff Sovereign. But we also have strategic assets, which is very inexpensive, but we give you a lot of research and we come up with a lot of suggestions in the mining space. You got to get into these stocks and you got to get into the foreign stocks. Trump is wrong. The best performing stock markets are outside the United States. And that trend is going to continue, not just, in spite of Trump, but in some ways because of the policies that he's pursuing are actually undermining our markets. And they're causing money to be withdrawn from the U.S. He keeps talking about all the money that's coming into America. Well, if you look at the global stock markets, the money's leaving. People are pulling money out of the U.S. to invest it abroad. That trend is going to continue and it's going to accelerate. So you want to load up on these foreign stocks. So again, look at all of my mutual funds at my website at Europac.com, my Global Value Fund, my emerging market fund, my dividend payers fund. I think these are going to be delivering phenomenal returns over the next several years, especially as the U.S. dollar really begins to decline. And I think that's going to be happening for the balance of this year. Anyway, I'm going to do another podcast, this time on Friday. Again, another Schiff Gold Friday market wrap. And so if I'm right about the gold and silver stocks, the GDX and GDXJ hitting new highs, new record highs, at least not the GDXJ. It'd be a new multi-year high, since 2011. But on the GDX, it could be a record high.
Fiscal pressures linked to rising deficit spending and accelerating interest costs are beginning to influence broader currency outlooks, particularly as debt servicing now rivals major entitlement expenditures. With interest payments expanding rapidly relative to economic output, long-term concerns around sovereign sustainability and monetary stability continue to build. Recent price activity has seen gold trade above the $5,000 threshold. At the same time, silver briefly moved into the $90 range, reinforcing expectations that hard assets may remain supported amid weakening confidence in fiat purchasing power. Market projections suggest that gold could maintain a structural floor near current levels, with limited downside even in short-term pullbacks. At the same time, silver's consolidation near recent highs reflects ongoing investor demand. Performance across mining equities, particularly those tracking gold, has also begun to strengthen ahead of bullion price breakouts, indicating potential momentum into the next advance phase. Let's get back to the interview.
The next thing he started talking about, he started bragging about the stock market almost immediately, right? Into the State of the Union. He's bragging about 50,000 Dow when the Dow isn't even at 50,000 anymore. And in fact, I think as of maybe yesterday, the market was up a bit today, but the S&P 500 was actually negative on the year. So we were having a down year almost at the end of the first 2 months. But the Dow right now is about 49,400 and change because it was up a little over 300 points today. But he repeated, he said that we achieved 50,000 Dow 4 years ahead of schedule. First of all, what schedule was there? There was never a schedule about when the Dow is supposed to go anywhere. And of course, the president's job is not to get the Dow to go up. That's not why we elect a president. He's not in charge of the stock market. The stock market's supposed to reflect the value of companies. It's not like, the president has some kind of mandate to have the stock market hit a particular level. But according to Trump, we got to 50,000 4 years ahead of schedule. But there was no schedule. But the reality is, when he took office, the Dow was at 44,000. He really thought that the schedule was for the Dow to go up 6,000 points in 4 years. That'd have been like the worst 4-year period in the history of the Dow. I mean, other than maybe a major bear market like in the 70s or something. I mean, that would be nothing. That would be like an average of 3% a year on the Dow. That was the schedule. I mean, who thought that was the schedule? I mean, everybody was way more optimistic than that. And he keeps trying to take credit for this miracle that he got the Dow to 50,000 in a year when that's only about 12% higher than it was when he took office. And that's much less than what the Dow went up during the first year of Biden. I mean, he talks about how Biden was the worst president in the history of the world, yet the Dow did better under Biden than it's doing under Trump. So, if the Dow is the benchmark, we got a worse economy now than we had under Biden. Now, I don't think we had a good economy under Biden either, but we don't have one under Trump. And you certainly can't claim we have one based on the stock market. And again, I mentioned this in an earlier podcast. We've got like the worst performing stock market in the world since Trump was elected. My foreign stock funds, we're up, I don't know, better than 10%, 11, 12%. Gold fund, up 25% or something this year. But my foreign funds are up double digit. The U.S. market is flat. So if you're going to base the economy on the stock market, how is he saying we got the hottest economy in the world? Which he said again. He repeated that. We have the hottest economy in the world. Well, based on the stock market, we've got the coldest, because we've certainly got the coldest stock market in the world. You could easily see that in the numbers. So if you're going to grade our economy based on the stock market, which Trump wants to do, it's an F. Stock market performance is bad, but Trump just pretends it's great. Doesn't even matter what the truth is. He just, repeats that lie. He just tells it loud and over again, and everybody just seems to accept it as if it's actually true. Then he talked about the unfortunate ruling by the Supreme Court. Right? It wasn't unfortunate. It was fortunate, and it was correct. But he's, I guess, going to try to blame, as I said, the Supreme Court for any problems in the economy, because he claimed the tariffs were so great. And so to the extent that the tariffs go away, now, of course, he's already illegally imposed some more tariffs, these 15% across the board tariffs that are also unconstitutional. The problem is, how long is it going to take for somebody else to challenge this, right? But meanwhile, they're only temporary. And how it took so long for the Supreme Court to rule on these unconstitutional tariffs, which it should not have done. The court should have given this ruling because it was so obvious, and they should have ruled it months and months ago before all these companies paid all these illegal tariffs. Because now, we've got a problem of how do you refund the money? And how are people going to put in for these refunds and all the problems?
Recent equity performance has raised concerns about underlying economic resilience, particularly as headline index levels mask broader weakness across domestic markets. While major averages have struggled to maintain consistent gains, capital has increasingly rotated into alternative assets, including international equities and precious metals. Notably, gold-focused investment funds have recorded substantial year-to-date advances, reflecting growing demand for defensive positioning amid currency uncertainty and fiscal policy pressures. This divergence between traditional equity benchmarks and hard asset performance reinforces the strategic relevance of gold and silver within long-term portfolio allocations. With bullion prices holding near elevated ranges and silver maintaining strength following recent pullbacks, forward projections for both metals remain supported by declining real yields and persistent debt expansion. As monetary conditions continue evolving, tangible stores of value may play an increasingly prominent role in capital preservation strategies. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by liking this video and subscribing to our channel for more financial insights. Don't forget to hit the notification bell so you never miss an update. Thanks for watching.